The Trump 2.0 trade continues last week as his protectionist policies continue to push global markets further down last week. His anti-China stance, of course, a key driver for the Hang Seng Index to tumble 6.28% last week. But the Philippines also heavily affected. We were down 6% at one point before the markets bounced 1.8 last Friday. Is this the end of the market sell-off? Let's discuss. My name is Den Slim and welcome to another episode of Monday Market Outlook. For some reason, the Philippines also heavily affected by the Trump election win. We were down 6% at one point last week before the markets bounced last Friday to end the week at 6,676. Key economic data from the US did play some part in the global weakness. The closely watched core inflation index held firm at 3.3%. The reading was in line with economists' expectation. But PPI numbers rising 0.2% on a month-on-month basis in October, and jobless claims coming in lower than expected. This led Chairman Powell to conclude that the US economy could continue to perform well with a more gradual rate cut approach into 2025. Furthermore, Friday's retail sales data showed continued strength among American consumers, signaling the economic resilience Powell mentioned as a reason that the Fed could proceed more cautiously. October sales increased by 0.4% on a month-on-month basis, beating the 0.3% expectations, and even the September figures were revised up from 0.4% to 0.8%. This has again dramatically increased the odds of a rate pause at the December Fed meeting to 40.1%, up from 27.8% from just a day ago and up from 14.1% just last month. And again, this has caused the 10-year yields to go back into our resistance zone here at 4.41, which in turn continues to strengthen the dollar back into the 107 resistance zone, ending the week at 106.73, which in turn continues to push the peso down to 58.73 last week, very close to a critical resistance area. So our hopes really is that this resistance area for the peso and even the dollar index and even the 10-year yields, if not. But in any case, once again, we got the same storyline this week as the PSEI broke through two support levels with minimal effort before bouncing off the heavy sell down last Friday to end the week at 66.76, right at a previous support zone, which is now resistance. And again, we check if price action aligns with fundamentals. Tepid earnings for TEL, disastrous quarter for Bloom, but good earnings results for SEC-B, while their net interest margins declined to 4.7%. Look at the loan growth, plus 24%. Cebu Pacific, numbers were down, negative 33% year-on-year, and a 173 million loss in Q3, but passenger numbers at least were up 14% in Q3. Great earnings from Converge, great earnings from Manila Water. Also, they are already at 85% of full-year targets. Let's look at the conglomerates. Tepid earnings from SM. They are only at 72% of full-year estimates. Remember, you should be at least 75% at this point in time just to be in line with expectations. So, SM not doing pretty well so far in terms of the expectations. AC and GT Cap doing quite well. They are already at 78% of full-year estimates, while JGS getting the bad end of the stick as their petrochem business continues to be a drag, lower URC sugar profits, and the continued drag from Cebu Pacific. Why is the PSEI getting such a bad reaction from the Trump election win? Now remember, we did report a disappointing Q3 GDP growth at 5.2. But what else, really? I mean, we don't export anything. How can tariffs affect us, right? The only thing we export is people, our nurses, right? And what? Mass deportation is going to affect us? Does this mean less OFW remittances? Does this mean consumer demand could go down? I mean, or does it mean that since Trump has mentioned that he doesn't want war and that he would not intervene if China invades Taiwan, are we at more risk now with our spat with China, right? So, I mean, it really doesn't make sense. Now, a quick look at the foreign sell-off in the past month shows how massive the outflow of foreign funds, which outpaced the inflows in the first 9 months of the year. And a possible reason here could probably be that foreign selling has simply overwhelmed local funds and local investors who were unable to absorb a sudden surge in foreign selling, right? So let's look at the PSEI charts. The market has so far declined around 9.48% since the Trump win a couple of weeks back. Now the index was in the middle of nowhere before the bounce on Friday broke the 7-day losing streak, ending the week at 66.76. But with this much selling pressure, it should be clear to everyone where the market wants to go, and it's saying it wants to go down. So we have to assume that last Friday's rally will eventually be met with bear demand at one point. Now, where do we see these possible levels? Of course, we have the immediate resistance here at 6,700. The next level will most likely be here at around 6,840, and the next zone here would be at 7,000. Though I think with this much fear in the markets, the bears could come in as early as 6,800. In terms of the Fibonacci extension here, we can see that the 0.38 fib does correspond to the 7,000 zone. So hopefully the markets can still rally up to this point. Now let's look at how the markets performed the last time Trump won the election back in 2016. If we look at the 2016 weekly charts, we can see here the week when Trump won, the election was in November 8th. The markets actually went up and then had a big sell-off followed by a consolidation and more selling pressure in the next few weeks, leading to a drawdown of around 11.23% before the markets eventually had a very late Santa Claus rally all the way to around the 7,200 level to start the year. That is around a 12.16% reversal from the trough in just 2 weeks, after which the markets consolidated and a further rally happened by April, right? So if we look at the same scenario, assuming that the same scenario can still happen this time around, we are currently down only 9.58%, and if we assume a drawdown of 11.24, we would hit right here into the 6,400 zone. Now if we do bounce off of that trough by around 12.16%, then we would end at around 7,150, or maybe here at the 0.618 fib at 7,196. So we'll see, right? And while there's really no guarantee that what happened in the past could happen again, we can only pray that we are very close to the bottom, right? Now, the index is currently at extreme oversold level, which could explain the technical bounce. So let's go to our screener here and look for some bargains. Let's go to stocks. Let's go to the Philippine markets, of course, PSE. We go to technicals and we make sure we have the RSI here. We want to make sure that we only choose large cap stocks. We add here RSI. We make sure that the 14-day RSI is below or equal to 35. We apply that. We want to make sure we have some volume on our stocks. Average volume for the week should be at around, let's say, 20,000. and then we sort this into ascending. So we now have the list of stocks that are at very extreme oversold levels. Now, my stock pick from this list would be Ayala. There might be some upside for gold in the next few weeks. Let's see, Apex maybe, GT Cap, and let's see here, SMPH and telephone, right? So we can make a list out of that. Add to swatch, new list, oversold, and save that. So now we have a list of your oversold stocks. Let's go to that list. AC, I would enter AC at around 600 probably. We may not see the bottom for AC yet. 600 or 580 would be a good level to enter. Apex, a good bounce to 349, but look for 327 for a possible entry. GT Cap, a good entry would be at 600. SMPH, for me, a good bounce off of this support level could be a good entry. Telephone, a good bounce at the support level here could be a good entry for these stocks, right? So on to the global markets. Let's look at the S&P 500. It hit resistance at the 60-18 call wall, failed to sustain that level, and eventually sold off, finding support with a modest bounce near the heavily traded zone at 58.61. Powell's hawkish statements have clearly dampened market sentiment, overshadowing early optimism around President-elect Donald Trump's policies. The S&P 500 has lost a third of its post-election gains, while the Nasdaq even saw a weekly drop of 3%. Now, similarly, stocks fell for the third time in 4 sessions as Powell's comments signaled no rush for rate cuts, tempering hopes for a December reduction. Now, for this week, with inflation data out of the way, all eyes will be on Nvidia earnings on Wednesday. Meanwhile, investors will closely monitor Trump's transitions plan. We already saw vaccine stocks tumble down following reports that Robert F. Kennedy Jr. might be appointed as a key health official. On Thursday, JP Morgan Chase CEO Jamie Dimon confirmed that he would not be joining the incoming president's administration. In general, though, the S&P 500 does tend to have some legs to run off until the new president is inaugurated, after which we consolidate for the next 100 days. But, maybe not everyone thinks that a Trump presidency will be good for the markets. Berkshire Hathaway's cash position has swelled to record highs at above $320 billion. Guys, remember that Warren Buffett's time frame is very much different from ours. See here, he built up his cash position 2 years before the 2008 financial crisis and started buying aggressively in the 2 years after that. His cash position right now is at all-time highs. Is he seeing an opportunity to buy in the next 2 years? Meanwhile, for this week, as mentioned, all eyes will be on Nvidia earnings on Wednesday. No major economic numbers due this week, so the US markets will react mostly off of announcements on the Trump administration's plans for 2025. For the Philippine markets, though, buying during a market downturn when there's this much fear in the markets can be very intimidating, can be very scary. We have to clearly recognize the distinction between recklessly catching a falling knife and strategically investing when fear dominates the market. For this week and the next few weeks, adopt a cautious approach to increase the odds in your favor. Look for stocks with oversold levels, preferably with RSIs below 30, and make sure these companies have great fundamentals. I mean, if you're going to choose a stock like, for example, JGS with a failing petrochemical business, URC, Cebu Pacific, a drag, right? I mean, of course, you'll be catching a falling knife. And even with great fundamentals, there's still a chance for the price action to go down further. But always remember that your focus should go beyond short-term movements to long-term opportunities, right? So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.